Good morning. Thank God it's Friday. Welcome to today's episode of Morning Well. We'll talk about three things: patient Powell, Biden's American Rescue Plan, and TSMC's bumper quarter. US stocks pulled back from record highs and fell for the first time in 3 days ahead of the reveal of Biden's plan. Tech and consumer discretionary sectors were the biggest losers, while energy shares rose with oil. Treasuries dropped, pushing 10-year yields up 4 basis points to 1.12%, and the spread with similar 10-year bonds widened to the most since March. Dollar declined against every G10 currency, with the Aussie and the Kiwi pacing gains. Gold advanced. Asian equity futures are narrowly in the green. The Dow ended down 0.2%. The S&P 500 was down by 0.4%, while the Nasdaq Composite also inched down by 0.1%. On the futures side, after Biden's plan was revealed, I see that the Dow, S&P and the Nasdaq E-minis are all trading about 0.1% higher. Shares of smaller companies outperformed the market on the stimulus news. The Russell 2000 index of small companies jumped about 2.1%. No time soon, Jerome Powell made clear the Fed won't be lifting rates for a long while and played down any concern over rising prices. The central bank will need to see inflation persistently above the 2% target before taking action, is what the chairman said. The debt burden isn't a high level from a historical perspective, but isn't on a sustainable path, is what he added. As for when officials may start to reduce Fed's bond purchases, which has garnered intense interest of late, he said, quote, "We'll let the world know." On the economic data front, initial jobless filings jumped way more than expected last week to about 965,000, dashing forecasts for a modest increase. The rise was biggest since March. The previous figure was revised slightly down to about 784. Continuing claims also disappointed, rising to about 5.27 million from 5.1 million versus consensus for a small decline. All eyes were on Joe Biden as he unveiled the details of the $1.9 trillion coronavirus rescue package. The proposal, titled American Rescue Plan, includes familiar stimulus measures with the goal of sustaining families and firms until vaccines are widely distributed. The current plan is the first of the two major spending initiatives Biden will seek in the first few months of his presidency. Some of the highlights: direct payments of about $1,400 to most Americans, bringing the total relief to $2,000, including December's $600 payments. Increase the federal per-week unemployment benefit to $400 and extending it through the end of September. Increase the federal minimum wage to $15 per hour. Extending the eviction and foreclosures moratoriums until the end of September. $350 billion in state and local government aid, and about $50 billion towards COVID-19 testing, just to name some of the highlights. Meanwhile, Delta Airlines rose about 2.5% after a chief executive said the airline might return to profitability by summer as more of the population is vaccinated and demand for travel picks up again. Delta finished 2020 with nearly $12.4 billion loss, marking its worst year ever. Johnson & Johnson, on the other side, rose 1.7% after it said its experimental COVID-19 shot generated immune responses from a single dose rather than two. On the corporate earnings front, all eyes were on Taiwan Semiconductor. TSMC, the world's largest contract chip maker, is benefiting from a combination of surging demand, struggling competitors, and top-notch technology. And it's betting big on the future to keep that edge. TSMC just logged another bumper quarter. Net profit for 3 months ended in December rose 23% from a year earlier. That brought full year profit to record $17.6 billion, a 50% increase from 2019. Strong demand has helped TSMC, which makes chips for companies like Apple and Nvidia. Stay-at-home demand has led to a boom in personal computers and servers used in data centers. Also, 5G smartphones and base stations added to chip demand. TSMC also sailed smoothly through the Trump administration's ban on Huawei, previously an important customer. China only accounted for about 6% of TSMC's revenue last quarter, compared with 22% a year earlier. orders from Apple and Taiwanese chip company MediaTek, which supplies many Chinese smartphone makers, probably helped to offset the blow. The chip shortage means a record year of investment ahead of TSMC as well. It expects 25 billion to 28 billion in capital spending this year, a 45 to a 62% increase from 2020. Semiconductor equipment makers like ASML Holdings will benefit. That's the update. Stay safe and healthy, and I'll speak to you on Monday.